Vice President Reberlery, we are ready for you to begin the Finance and Audit Committee meeting.
Thank you, Estella. Good morning, friends and stakeholders. Welcome to the Chicago Board of Education Finance and Audit Committee meeting. Today is January 27th, 2021. We're holding this meeting electronically via Zoom in a hybrid fashion. I would like to note that we have several board members who are physically present in the boardroom. I'm Sendel Revelary, chair of the committee, and on behalf of my fellow board members, thank you for joining us today. The order of today's meeting will be as follows. First, call to order. Second, roll call. Third, a financial update. Fourth, an audit update. Fifth, public participation in an electronic format, and then we will adjourn. Madam Secretary, could you please state for the record the notice procedure for this meeting?
Thank you, Vice President Reberlery. Notice of this meeting was posted on Monday, January 25th, 2021, at least 48 hours before this meeting on the cpsboe.org and cps.edu websites and at the 42 West Madison Street lobby. Thank you.
Thank you. The Finance and Audit Committee meeting of Wednesday, January 27th, 2021 is hereby called to order. Madam Secretary, could you please call the roll?
Thank you, Vice President Reberlery. Member Rome?
Here.
Member Todd Breland?
Here.
Member Truss?
Here.
President Del Valle?
Here.
I would like to note for the record that these 4 board members are physically present in the boardroom, and Vice President Revelori.
Here.
Thank you. We have 5 members present. There is a quorum. I would also like to recognize Joseph Moriarty, our General Counsel, who is here in person, Latanya McDade, our Chief Education Officer, who is here in person, and Arnie Rivera, our Chief Operating Officer, who is also here in person. Thank you.
Thank you. So let's start with the presentations. First, the finance presentation, and then the audit presentation. Chief Financial Officer Krug, Mr. Moore, and Ms. Jacob will be presenting. So go ahead.
Good afternoon, President Revelori. Lenny will start the presentation with the financial results for fiscal year, the fiscal year that ended June 30, 2020, followed by Wally Stock that will have a presentation on our debt. Lenny?
Good morning, Vice President and members of the board. I'm here today. My name is Lenny Moore, and I'm the controller for the district. I'm here today to present the results of our audit and provide you with brief highlights of our financial activity for the year. I'm joined today by our Deputy Controller, David Paul, and our Assistant Controller, Dongmei Lee. And also, we'll have a special treat for you, and as we discuss our debt activity, is our Treasurer, Walter Stock, and his team, specifically Benjamin Kidder, will join us. So today I hope to cover with you, just go over with you briefly the components of our audit, our external audit, our annual external audit, the process that was followed and the results of that audit. And then I'll discuss briefly with you some highlights from our financial statements that were issued, give you a little review of the budget to actual results, and then our treasurer will get into discussing some debt activity and the comparison related to the debt. So I'll try to go through it really quickly. I know internal audit has an exciting presentation for you. So let's start with the components of our audit. We issued 3 major reports for the year. One of them is called our Comprehensive Annual Financial Report. And that report includes our, balance sheet or statement of net position. And it also includes what commonly called an income statement. And then in that statement, in that comprehensive financial report, you'll also see a section of management discussion analysis where we sort of go over the results that you'll see in the financial statements and talk about what they mean and give you a little preview of what we expect to happen in the year to come. And then you have our schedule of expenditure of federal awards. that sort of summarizes all our grant activity for the year. So that report, when you look at it, that schedule, it's categorized by agency, by type of grant. So if you're ever curious of the range of grants that the school gets and how much money we get related to the different grants, you can take a look at that report. So our external auditors, which have to be independent by statute from the district, meaning they're not employed by us, they don't report to me, they don't report to the chief financial officer, they review these statements. And the last one that they review is a statement that we do, a report that we do for the Illinois State Board of Education. It's called our annual financial report. The auditors look at that. There's different due dates for these reports. The CAFR, or the Comprehensive Annual Financial Report, it's due by the end of the year, the calendar year. The grant report is due in March, and the AFR is due February 15th. But we try to get these done as soon as possible so that you can have results of the prior fiscal year as soon as possible. So let's go to the next slide. So the audit takes about 7 months for them to do the audit of those different reports that I just alluded to. This year, I'm pleased to tell you, as in the last prior years, that the auditors for our comprehensive annual financial report, and in particular our financial statements, issued an unmodified opinion. And as you might guess, what that means is when they looked at our financial statements, they did not say anything that suggests that they should modify their opinion. So the typical opinion is to say that the statements present materially the financial results of our operations and our financial condition at the end of the fiscal year. If for some reason the auditors don't believe that and believe that the statements are materially misleading in some kind of way, they will modify the opinion. But we had an unmodified opinion, which is an indication that the independent auditors felt that we presented our financial statements fairly. Also, as they conducted their audits, they took a look at things like how well did we comply with board policy and rules and state policies and rules regarding financial related activity, and they didn't find any material instance of non-compliance. And the same thing when they tested our grant activity, our grant programs, our grant agreements, they didn't find any instance where we were in material non-compliance with any of those. They did find a couple of transactions where when they looked at it, we had overestimated certain expenditures for our capital project fund. And those two transactions that they found, we've corrected them. So what you see in the financial statements reflect accurately our capital project fund activity. We also looked at why those two misstatements occurred, and we were corrected for those. The major programs that they looked at this year, sort of on your screen, you can look at is our Title I grants, local education agencies, and you can sort of read the rest of them there. But one of the things I wanted to point out to you about the audit this year is that it was done for the first time during this pandemic, during this restriction. So it was an unusual year for us and the team. And in spite of the remote nature of the audit and having to put together a comprehensive financial statements in this remote environment, we were able to do it much earlier than we've done in the last several years. And that's a compliment to, like I said, the leadership of David Paul, who's here, and to Dongmei Lee, our assistant controller, but also, you know, to put together some of these reports, we need the cooperation with various departments in the district, and they had to provide this information and schedules and whatever else we needed remotely. So I just like to compliment and acknowledge the work that they did to make sure that we can still produce for your purpose, for the public's and for the board's purpose, these financial reports that I just mentioned earlier. So if we can continue. So now I can get into some of the highlights from those financial statements, the exciting highlights. Oh, one thing I forgot to mention earlier, which is we produce a report called the Popular Annual Financial Report. And what that is if for whatever reason you don't have the time to read the big, huge, comprehensive annual financial report or to delve into the schedule of expenditure of federal awards, we've sort of highlighted from you the most relevant things in a user-friendly format. So if you just curious about our financial results and you don't really have the time to dig into the financial statements, or maybe they kind of confusing to you, you should take a look at our Popular Annual Financial Report. It's on our website. So I just wanted to point that out. So let's get into the highlights. So the balance sheet that we're presenting for the purpose of today is the balance sheet for the main operating fund for the district. And one of the things about this balance sheet that we're presenting is it's a near short-term balance sheet. So in other words, it's designed to capture things that are closely resemble the condition of the district as it relates to how we manage our short-term resources, our cash basically. And so it doesn't include things like our long-term debt. And that's something that our treasurer, Walter Stock, will talk to you about later. But it does give you a very good indication of how we're managing our resources, our stewardship over our short-term resources. So so if you look at the balance sheet, we start with our cash and investments. And the cash and investments, you will look at it and you say, well, gee, compared to last year, the orange is last year, that's FY19, and the blue is this year, or aqua green, whatever you want to call it, is FY20, the results of FY20. And you'll see that we're down slightly by about $100 million. However, if you look at total assets, which is 3 bar graphs down, it's up by about $148 million. And so the reason for that is that while we didn't have the same amount of cash or more cash that we had in 2019, we were owed more money. That's the receivables thing. We were owed more money. And in addition to being owed by external parties more money, we're also owed what's called between our funds. So we have our main operating fund, and then we account for activity of our capital projects fund and some other activities and other funds. And so sometimes we fund expenditures out of our main operating fund. That's our general operating fund. And then the other funds have to reimburse. So what happened in FY20 is you have increased capital activity for the year, increased spending. So when we ended the year, our capital projects fund owed our general operating fund more money than it did last year. So if you look at, if we had collected all the money by the end of the year that was owed to us by our capital projects fund and by things like our property tax receivables and our state and federal aid, our cash position would be much stronger than what you see now. So we would have more cash in the door. So we're optimistic because we ended the year with increased assets than we did the prior year. And these are short-term assets. So we had increased cash flow than we did, increased short-term assets than we did the prior year. When we look at the picture of liabilities, so overall, if you look at the total liabilities and deferred inflows, which is about 1, 2, 3, 4 of those bar graphs down, you'll see that our liabilities were up by a little bit, by about $103 million. And the primary reason for that is that we had increases in what's called deferred inflows. And trust me, when the accounting standard boards came up with this new concept called deferred inflows, all of us accountants cringed because it's a very not intuitive thing to explain. But what deferred inflows mean, that's under that category right here that says due to teachers, pensions fund, other liabilities, and deferred inflows. And of that, those 3 items there, the bulk of the increase is due to deferred inflows. And what deferred inflows essentially mean is that the district is entitled to certain revenue, but we hadn't yet made certain things haven't occurred so that we can't recognize them on the financial statements as revenue. And in this case, we're primarily talking about property taxes. So, you know, we've levied for the taxes, but we haven't collected them all. And so those were slightly up at the end of the year than the prior year. And those played a big role in the showing that the liabilities are above last year. So those present little concern for us because we know we ultimately will collect most of the outstanding balance due on property tax receivables. And our TAMS was up just a little bit outstanding, and that's just due to timing, not due to any other factor than that. And our accounts payable, which are short-term liabilities, those are down a little bit. And that's really just we were able to pay off more invoices before the fiscal year closed. And that's just a timing thing. And overall, our balance sheet went up. So let's look at our income statement briefly, and I'll just point out some highlights from that. I have another slide after this, which I'll tell you about the components. So essentially at a big high picture, you'll see that our revenues were up by about $202 million. Our expenditures were up by about $305 million. And here's the components of that. So our property taxes, as expected, was higher than the prior year by about $117 million. Our replacement taxes were down a little bit, and that's primarily due to the COVID-19 environment, because the replacement tax, a lot of this business activity, and so when you're have depressed business environment, then those are going to be down. And it was, probably the second half of the year where we were really impacted by that. State aid was down from the standpoint of what we actually received, and a lot of that is due to increased diversions to charter schools. So when we got a lot of the state aid, a lot more than what we had anticipated, not a lot more, but more than what we anticipated had to be diverted to charter schools. Federal aid was up slightly, and other revenues. Now, this increase in other revenues is primarily due to over $60 million that we received from the city in tax increment financing surplus money. So that increased our, and now one of the things about for budget purposes is that tax increment financing surplus funds were budgeted under property tax, but for financial reporting purposes, we reported under other revenues. And so that's why that column is up the way you see it. When we jump over to the expenditure side, one of the things that you see as far as the big increase is personnel costs, which, personnel make up the bulk of our expenditures anyway. But a lot of that is due to, we finalized our collective bargaining agreements this year. We also, pension costs actually increased the amount that we've contributed for a pension that goes up. And that'll be going up every year for the foreseeable future, just because of the liability we have for our pension obligations. Services are up, but the services are up, and that's primarily due to COVID-19 spending. But at the same time, commodities are down, and that's because the schools were closed, and so we had to distribute less commodities. And the other expenditures were sort of related to the services as COVID-19 expenditures. So if we can go to the next slide. And what this does is it's sort of, you see it during the budget, where do we spend most of our money? And this is just letting you know from an actual standpoint, when you look at a general operating fund, it sort of dovetails what you might expect. Almost over 2/3 of our expenditures is on personnel related expenditures. If we can go to the next slide. Now we get into our budget to actual comparison. So what I've just been doing for you is comparing our FY20 results with our FY19 results. So I'm switching gears here, and now I'm comparing our FY20 results with our FY20 budget. So this says, well, how well did we do versus what we expected to do versus how well did we do versus what we did last year? And if you look at how well we did versus what we expected to do, we were about, on the revenue side, about $54 million down from what we expected. And on the expenditure side, we are about, a little over $100 and some down on the expenditure side. And I'll talk a little bit about, it's 155 million, sorry, down on the expenditure side. So let's flip the slide and I'll go a little bit into the details. So if you look, we start off and you say, well, we're down for property taxes. We didn't collect what we expected. But actually, that's not true because of what I told you before. So from the budget perspective, they included the TIF funds in the property taxes, whereas we actually included it in other revenue. So if you look down, you'll see in other revenue, we exceeded the budget. If you look in property taxes, we didn't meet the budget, and that's just a geography type of thing. We booked the roughly $62 million in TIF surplus money, tax increment financing surplus money, down in other revenues where it was budgeted in the property tax line. And then, but we were also down replacement taxes, so that's the difference. The other part of the difference in the property tax and replacement taxes, the fact that we were down on the replacement taxes. State aid, I previously explained to you that $21 million, that's really related to diversions to charter schools, increased more than what we thought. Federal aid is roughly around what we expected. So when we get over to the expenditure side, you'll see that our salaries and benefits were slightly below what we budgeted. And this is in spite of, the collective bargaining agreements and the retroactive pay related to that. And it's primarily because of decreased personnel costs because of the pandemic, the school closures that occurred in the latter part of the fiscal year. Services are up, and that's due to, like I was telling you, it exceeded what the budget said, but that's primarily because of the COVID-19 spending, a lot of COVID-19 spending there. Now, when you look at this other expenditure category, you look at it and say, wow, that's a huge difference. But as you know from the budget process and for the public's purpose, what's put in that line is contingency funds. And that's to make sure that we finish the year exactly the way we expected and we don't have any unintended results. So budget puts together this a contingency amount. And whether or not we need to use those contingency funds are dependent on what happens with the other categories. For instance, if we incur a lot of overtime, we incur a lot of unexpected services, commodities, etc., then you're going to see those expenditures go up. And then if we get more grants than what's anticipated, then you'll see those expenditures go up. But because of the closures during the latter part of the year, a lot of that contingency funding, including a lot of money we set aside for grants that we would normally expect if needed, that we didn't need, did not materialize. And so we ended up with a very favorable balance between what was budgeted and what we actually received in contingency fund. So if we can go to the next slide. So now I'm going to turn things over to my colleague, the Treasurer, Walter Stock. But before I do, I just want to point one thing out about the numbers you will see over the next 3 slides, is that these numbers are based on the way we report them for financial purposes. And this may be slightly different than when our treasurer comes to you and he presents numbers for management purposes. And for management reporting purposes, the numbers are presented in a way that helps facilitate decision making. Reporting is just letting you know the conditions we have at the end of a fiscal year and the results of our operation. So now I'd like to turn it over to Walter Stott and Benjamin Kidder.
Thank you, Lenny. Hello, everybody. Good morning. Walter Stock, the CPS Treasurer and Deputy CFO. I want to walk through the CPS outstanding long-term debt, as Lenny talked about, and then some associated characteristics, and just primarily where the debt was at for 6/30/20, the end of our fiscal year. We also have the short-term debt outstanding that Lenny mentioned. There was $500 million outstanding at 6/30/20, but that was primarily accounted for in the operating fund, and that is not part of the long-term debt, which is primarily captured, or it's all captured in the debt service fund. So CPS has 3 funds. We have the operating fund, the debt service fund, and the capital fund. So this is really speaking to the debt that's associated with the debt service fund. On page 12 here, we have a historical and current at 6/30 par amount of debt outstanding. So if you think about this, in the context of what I just mentioned, our debt is issued to support capital budgets and finance capital projects. So this is the amount of cumulative debt that we've issued over the years, and where it stands at 6/30. It was at 6/30. It was $8.12 billion of outstanding long-term debt. Each year, we pay off a small portion of our debt. It amortizes rather slowly, and then we add a little bit more on to finance the need for the capital projects. But typically, the debt has been paying off at a slower pace versus what we've been adding, except from 19 to 20, because we had a little bit of a hiatus. We didn't issue as much that year. We only did a refinancing, and it didn't add any incremental debt. But each year, typically, we're adding on additional amounts to finance capital, and that's coming at a pace faster than it's paying off. Just a little step aside for a current snapshot, the debt did go down. So currently it's sitting at $8 billion. We paid off about $128 million on 12/1. So that was good news. But we're in the process of adding on additional debt, which is about $450 million. So, a projection would be that 6/30/21, you'll actually see that number go up again, and speaking to what I was saying, that we're adding on debt to finance capital at a pace seemingly faster than what it is that's being paid off. And that's a legacy issue. The debt is fixed rate. The principal payments are set. So that will continue for some time until we can navigate a different way to think about financing things. The next slide is on page 13 here is a recap of the revenues that are needed to support the debt. So another way to think about this is, all the funds are intertwined here. So the operating fund, which Lenny was recapping, a portion of the monies out of that fund are used in the debt service funds to pay the debt. And that is primarily the blue and the yellow that you see here, the state aid and the personal property replacement tax, which is CPS's share of corporate income tax. We do have a small portion of debt service every year that's paid for from non-operating funds, but primarily that is property taxes. We have an intergovernmental agreement with the city of Chicago, which is backed by property taxes, and we also have a levy for capital improvements, which is property taxes. So of that $241 million there that's depicted, approximately 200 million of it is property taxes, and the other smaller portion is either capitalized interest or some subsidies that we received from the federal government that date back to the 2008-9 era when they were issuing bonds that contained a federal subsidy. So, I mean, primarily the point of this slide is that each year when we issue additional debt and we have all the legacy debt and we're looking at what we're paying, and it's paying for the capital projects, the lion's share of that comes from the operating fund. So I think it's important to connect the dots there and understand the interaction between the funds. Next year, for a perspective there, the deposit for the state aid will rise above where it's at from the prior year. So next month, we'll be making the deposit for the upcoming debt service year. And where that number was, I believe it's at the 380 mark. Our debt service deposit for the upcoming year will be 445. So quite a jump. And that's contained in the budget. So that's all money that we've allocated and we're ready to make the payment for. But just so you're aware that these numbers, just like when we see the debt rising each year, typically the payment that is associated with the debt also has a corresponding rise. I think the next page is just sort of a historical, or not necessarily historical, a future projection of what the debt will look like in the outcoming years. So this doesn't account for any new issuances of debt. It doesn't even include the debt that we're about to issue. It's just a depiction of the par amount of debt that was shown on the first slide and how that is paid out to 2046 is the final payment on the debt. So just like I was speaking here, I mean, and it's broken down into the types of revenues that are needed for the payment. And just like I was speaking to that is rising a little bit every year. It's maybe a little hard to see, but I think it is apparent that the overall debt in 21 is just under $700 million that's needed for the payments. And in a few years, without any new debt, it's going to peak in the $750 million range before it starts to decline. So we're trying to manage the debt in a way where I think the next slide talks a little bit more about that. It shows the capital expenditures and the debt issued. So the gap here is able to be achieved basically because we have had some monies aside from prior issuances of debt, or we delay the issuance of debt until it's absolutely necessary to finance the project. So we will try to minimize the cost of debt service by delaying issue until we need to issue. We work closely with the facilities team to understand the cash flow that's needed and make sure that we're able to meet those needs. And we just continue to issue debt at a moderate pace and also try to layer the debt in around the valleys or the decline in the debt, so that we're minimizing the incremental amount in the peak as much as we can. That is what our strategy is at this point, and we will continue to do so. But you can see from the slide that there is a large gap there represented. So it's something considerable that we need to kind of continuously touch and manage in the future. So I'll pause there. I don't know if there's any questions, but that's the conclusion of the remarks.
Thank you so much. I think given the depth of what you've shared, it would be great if we have board member questions to have them now instead of after two extremely comprehensive presentations. I know there are many other things going on in our district and in our city. I think it's really important that we highlight the diligence with which you're approaching this work and how it helps us steward our resources. It's obviously very complex. There are a lot of interconnections, and these are very big numbers to support a large district that serves hundreds of thousands of students. And I wanted to thank the whole team for not just this presentation, but all the work behind this with us as board members, and also the work to help the broader public understand this a little better with the popular annual financial report and everything else. I will start with one question, and then I have some more, but I wanted to make sure other board members had a chance to. Way back on slide 5, Lenny, you mentioned that there were 2 adjustments as part of the audit, which happens. That's why an audit is helpful. I just wanted to clarify those 2 adjustments. Did they make things more favorable for the district's financial position, or less favorable when they were adjusted from the capital projects account?
So the adjustment that we made things more favorable. So if the auditors had not pointed it out, we would have presented financial statements that were less favorable for us. So we're actually happy the auditors caught it.
Great. And then one little bit of historical context. As you know, we're relatively new on the board. You have been doing this for a while. Is it typical that we get an unqualified opinion that says our reporting is all good and trustable?
Yes, that's typical.
Great. Board members, any questions for the finance team?
Vice President Revolui, I have a quick question.
Sure.
Yeah. First of all, I want to thank everyone for the hard work and this effort to make sure that we, serve our families in a fiscally responsible way. So thank you all for your hard work. But getting back to the other revenues, those one-time tips, surpluses, I mean, they're just the one time, right? In other revenues.
Yes, it's what the city of Chicago had given us from the surplus TIF, and each year they evaluate how much they're going to give us, and they coordinate with budget. And I think in 21, Mayor Slava could comment on that. We're expecting more surplus funds.
How far do you expect in the future? Because we're taking on a couple of liabilities from the city, especially some of our employees that were formerly under the city pension fund, and pretty much that the surpluses is kind of helps create that wash. But how long do you anticipate the district receiving surpluses, or you think that we as a district feel in a position to absorb those costs?
Good morning.
Well, I don't know if Mayor Slava is present.
Yeah, good morning, Member Trost. Yes, as every year we budgeted certain amount in our budget, and as remember, we have 97 million for this year, and then the city did declare surplus, and we got an additional 70 million from the surplus, which is pretty much the same, very closely to the amount that they declared the year before. So, it is our expectation that there will be the surplus is declared every year, but we cannot guarantee that. But we have been receiving this surplus for many, many, many years.
Yeah, I understand that, but the question is so we should anticipate receiving surpluses, let's say 5 years down the road, or just prepare for contingencies?
Member Troll, as I say, I cannot guarantee that. Our expectation is that hopefully, yes, that we will continue to receive surplus, but we depend on the city declaring the surpluses.
Thank you.
Vice President Revolori?
Yes, President Tomei.
Yes, and responding to Member Truss, there is an annual surplus, TIF surplus, but this year we were given an additional approximately $60 million to cover that pension pickup for employees that were under the city pension fund. That was a one-year arrangement. We don't know whether we're going to be able to get additional surplus dollars, whether that total bottom line amount will change for next fiscal year. So you're right, Member Truss, that at some point we are going to have to absorb that amount, that 60 million amount, and that will probably be next year. But the city recognizes our overall financial condition, and we are always advocating for getting a larger share of the TIF surplus, which is based and distributed based on a formula, of course. So it's not a matter of larger share. It's just hoping that a larger surplus will be declared by the mayor that will then allow for distribution to our system to increase.
Thanks, President Tomei. If there are no other questions, just keeping an eye on the time, I want to make sure that Ms. Jacob has time for the audit presentation. So hearing none, go ahead.
Thank you. Can you all hear me okay? Great. Good morning, board members and members of the public. My name is Angelica Jacob, and I'm the Chief Internal Auditor for the district. I've served in this role since September of last year, and today I'll be providing the audit update, which will be an overview into our office and updates of ongoing work. So first, I'd like to start with just providing a quick overview of the role that we serve in the district and our purpose. Our office is committed to improving district practices and be a value-add partner to school leaders and departments across our district. We manage and oversee district and school level audits and reviews to evaluate the effectiveness of the department, program, internal control environment, and adherence to regulations and district policies. If we can move to the next slide, please. Our scope of work can be categorized into these three main categories. Our team is charged with oversight and conducting reviews to assess school level internal control environments and overall effectiveness of our school operations through our school audit scope. We also review central office departments and functions where we again assess effectiveness of control environment, compliance with policies and regulations, and we identify process improvements. As part of this work, we often have special projects where it's not a formal audit, but we may be assisting a team in identifying enhancements to their process or setting up a compliance monitoring function. For risk management, the role that we play is facilitating risk management activities across the district, which include ongoing risk assessment. And as part of this work, we also lead the risk committee, which is a cross-functional team that's established to protect our vision and support and operationalize our district-wide management practices and risk mitigation strategies. For current updates on our projects, I'd like to start in terms of reopening efforts. We can go to the next slide, please. So our team has set up a compliance function for the completion of health screeners across the district. We're monitoring daily completion of these screeners and following up with staff on any exceptions that are identified. We're currently focusing on several priorities to continue to enhance this process, such as referring any repeat non-compliance individuals to complete additional training, and more importantly, rolling out an awareness campaign with additional district-wide communications and guidance to remind staff of the importance of the health screener as a safety measure to mitigate risks during this time. Can you move to the next one? Thank you. Next, for school audits, historically, our school audits have been conducted in person, and we have a scope that covers finance, operations, safety and security, and facilities, just to name a few of those areas. During fiscal year 20, our team was able to complete 62 of these in-person school audits. And in order to continue obtaining coverage over these school transactions, we implemented a continuous monitoring audit program, or what we're calling the CMAP, to leverage the use of technology and data analytics to expand our audit coverage across all of our district schools transactions. So traditionally, our team would be able to complete about 100 school audits a year, testing with a sample-based approach. This would require about 5 of our auditors fully dedicated to school audits and out on the field about 4 days a week. CMAP not only allows us to expand coverage to all district schools, but with the use of analytics, we're able to also get coverage over all transactions in a given time period. So this provides us with a more comprehensive view of the control environment and also frees up capacity for our auditors to focus on other central office audits or special projects, such as the health screener compliance review that I mentioned in the previous slide. The first phase of CMAP, if we could just go back to thank you. The first phase of CMAP was rolled out over winter break, and we identified 65 schools for follow-up. So we follow up with each principal and clerk, and we confirm that the issues have been resolved. We also provide guidance and a refresh of policy just to help the school improve in these areas going forward. We work closely with Lenny's team to provide the finance team with results of our testing, inform any ongoing training initiatives they may have, and also flag issues for their awareness to inform potential process improvements. So we'll continue this approach, and we'll add in additional controls on a quarterly basis. We envision that the future state of school audits will be a hybrid approach where we can leverage the technology and data analytics using CMAP, but also still conduct in-person audits where necessary based on a risk assessment. We can move to the next slide. Thank you. For central office, we currently have 2 central office audits ongoing that we plan to finalize at the end of the quarter. So the grades audit is an end-to-end review of our grading practices across the district. And for safe passage, this is a program review with a scope that includes vendor onboarding testing as well as invoice testing. So the end deliverable for these audits is an audit report that details findings, recommendations, to which management provides a management action plan that outlines what remediation efforts they'll take to address the issues that were identified in the report. We can move on to risk management, please. Thank you. And in the enterprise risk management section, I'd like to just set the foundation here and provide an overview of what we mean when we talk about enterprise risk management, or ERM. So ERM is an ongoing process, ongoing activities that come from the top. So this is something that's affected by our leadership. And the objective is identifying potential events that could affect our organization and managing these risks to a level where we feel we have reasonable assurance that we'll still be able to achieve our mission and our objectives. A risk by definition is anything that could impede us from achieving our mission. So there could be both internal and external risks that we need to manage and work on. So we follow our industry framework and best practice, which are set by COSO. This is the Committee of Sponsoring Organizations of the Treadway Commission. And this is really just a joint initiative of 5 private sector organizations that provide thought leadership and develop best practice on developing this framework. So some of those organizations include the Institute of Internal Audit and the American Institute of Certified Public Accountants. So the reason why the district supports this work and believes it's critical is that 1, it's centered on our district's mission. So all of our risk management activities are always conducted with our mission as our focal point. And 2, managing these risks affects our ability to achieve our district strategies and objectives. So this is an evolving process where we continue to improve and mature as an organization, but it's essential to enhance our performance by not only taking into account opportunities that could create value, but also managing these risks in a way to create value as well. So we continue to identify ways to embed this into our day-to-day management activities. And one of these areas that we're currently exploring is identifying a point of convergence with our existing continuous improvement process. But as we work to formalize these risk management practices, it is exciting to hear our leaders across the district talk about risk, consider risk as they move their respective work forward and they make decisions. So that's one of the objectives of risk management, that you're able to embed assessing risk into daily management activities across the district. We can move on to the next slide. Thank you. This slide just provides a brief recap of the work that we've done in regards to risk management. So one of the exercises we conducted is the enterprise risk assessment, where we completed a comprehensive risk assessment across our district. We interviewed over 70 departments. This included over 70 individuals. This included over 30 departments. And as a result of this work, Cabinet had the opportunity to prioritize these key risks based on the likelihood and the impact of these risks. So we presented these key risks and an overview of the risk assessment during the December 2018 board meeting. So I encourage you all to review the materials presented during that Finance and Audit Committee meeting to learn more about these results. Throughout the year, we've also held various deep dive activities with management and key risk discussions around new and emerging risks. And as I mentioned, it's a constantly evolving practice that we work to improve on. So next, our focus for risk management are quarterly touch points with business owners to review risk and the district's mitigating strategies and provide leadership with updated reporting on a quarterly basis. And as we've discussed with Vice President Reveluri, this would be a great opportunity to provide a deeper dive into a few of these risks and the district's extensive efforts in mitigating these risks. So again, today I just wanted to set the foundation for enterprise risk management framework for more detailed discussions to come in future Finance and Audit Committee meetings. And that concludes my audit update. Thank you.
Thank you so much. I didn't know much about audit before we started working with you. And I think this is really important work for the district. It's also really helpful work for us as board members. I appreciate how your team is both examining how things are working now and also through the risk process, trying to anticipate things that might happen, all with a focus of improving. And as you said, with our mission as a focal point. And then there's just a lot of very smart things that I hear your team doing, and that's super helpful. And I look forward to hearing more both at these committee meetings and other venues going forward. Other questions from board members would be great.
I had I guess more of a comment, and we've talked about this before, but I really appreciate the comprehensive nature of this work. It's so detailed and crosses the entire institution. And I'm not familiar with other school districts that do things at this level. So I think it's really helpful. And I think for us as a board, I want to think more about how we can use this to inform some of the policies that come before us. And thinking about your assessment of these risks in relationship to the policies that we review and vote on. So I'm hopeful to looking forward to ways that we can integrate those together.
Absolutely. Thank you.
Yeah, totally agree, Member Todd Breland. Other questions or comments from board members? I just had one question myself. I was wondering what aspects of internal audits work are publicly available and where people could look to find more about that.
Yeah, so currently our audits are to inform management decisions and management practices. So our reports are not or have not been in the past publicly available, but we are looking to develop, an external website where we can show more of the work and some of the themes that our team focuses on, so that the public can be more up to speed and up to date on the different initiatives that we're undertaking, since it is a lot of focus on how we work to improve district practices and how we're partnering with schools and with departments, to help them improve their practices, not necessarily in a way where I know I get this question a lot. It's a I got you approach, but really working together to improve our overall district.
And the information from the enterprise risk process, is that available outside the district in any way?
Yes, so we shared that publicly in the December of 2018 board meeting. So the materials are on the board's website. And we did share the 12 key risks as well as the opportunities and the mitigating strategies that are tied to those risks as well. So that was a very comprehensive overview of the result of the risk assessment.
Right, thank you. President Tavares?
Yes, thank you. On the safe passage audit, we contract with vendors.
Correct. It's 19 community-based
19
organizations.
community vendors.
Mhm.
And this audit will look at a number of things. But will it also look at how the service is delivered by vendors and look to see if there's consistency? I know that I've inquired in the past about how a particular school is selected or a particular area for a safe passage route. And so is the audit going to look at that process, the current criteria for selecting safe passage routes and vendors, and then the services that are delivered, and whether there's a variation or are there similar approaches? Are assignments different from area to area, from vendor to vendor, et cetera?
Yeah, I'd say overall we're looking at the design of our internal process and how we manage the work of these vendors and keep track of that work as well. In terms of the routes, we are also working with the demographics and planning team to look to see how those routes were determined, how frequently are they reviewed. So all of that will be incorporated in the scope, and it's really end-to-end process review of the safe passage that at this moment it's still in progress. So I don't have specifics to share with you, but it's definitely something we can come back with as soon as the team is able to share that with the stakeholders and we finalize the report.
Thank you.
Yeah, absolutely.
Okay, hearing no other questions from board members, let's now proceed with today's public comment segment. Madam Secretary, could you please share the rules for public comment?
Thank you, Vice President Revelary. For the record, I would like to note that advance registration for public participation was available on Monday, January 25th at 9 a.m. through Tuesday, January 26th at 5 p.m. Individuals who registered to speak will have 2 minutes to comment, and I will call the speakers in order of registration. This meeting will conclude after the last person who has signed in to speak has spoken, or at 10 a.m., whichever occurs first. When called, please state your name, and just as a reminder, to unmute, just press the *6 on your phone. I would also like to note that written comments will be accepted until 5 p.m. Thursday, January 28, 2021. Written comments can be submitted by completing the written comments form at cpsboe.org or via mail to 1 North Dearborn, Suite 950. Should you have any questions, please contact the Finance and Audit Committee via email at boefac@cps.edu. And Vice President Revelary, I will call by calling our first speaker. That would be Cortland Stokes, please. Speaker number 1.
Good morning, board members and members of the general public. My name is Cortland Stokes, and I'm an employee of CPS. More importantly, I'm a proud parent of a kindergarten student at Deneen School of Excellence. I've been connected and a collaborative parent while my student has been at Deneen in the AUSL network. However, as an employee of CPS, I have a unique advantage of being a stakeholder from both vantage points. I worked at O'Keefe School prior to AUSL beginning its management responsibilities of the school. I worked at Dulles School of Excellence, Sherman School of Excellence, and now I'm a proud staff member at Deneen School of Excellence in the Grand Crossing neighborhood. At Deneen, students and staff, we have persevered and adapted in this virtual climate, but this just didn't begin at the start of the pandemic. I believe firmly because of the guidance provided by AUSL. Deneen School of Excellence has always fostered a culture that nurtures the whole child, and Deneen works hard to educate and inspire each and every student. I'd like to conclude my comments this morning by saying this: let the continuity continue. Please don't disrupt the progress. Thank you.
Thank you, Mr. Stokes, for your comments. Our next speaker, please, will be speaker number 3, and that will be Latrice Sumrell. Speaker number 3. If you can please unmute.
Good morning. I'm Latrice Sumrell, parent of a junior young man at Urban Academy Inglewood campus. I appreciate your time today for hearing our experiences from my house to yours regarding the essential and valuable work being shared amongst the school. My son Antonio is not a perfect child. He was reading at 2 years old. He got bullied at school. He's now 3-time citywide boxing champion. He's been homeschooled. He's helped save lives by knowing what to do early. And he's currently, of course, they're dealing with the pressures of remote learning, but he is a fighter. I feel that it is a fiscally responsible decision to keep Urban Prep Inglewood as a budget line item for years to come. Urban Prep is not just a regular high school because it's close to home or that the students have a high graduation rate, but it's tailored to the culture, giving my son what he needs to become a man in this climate of change. I asked him recently, do you like your school? Would prefer to be somewhere else? He responded to no. Urban Prep lets me see me and be me. From the teachers to the staff, it's no blame on today's pandemical circumstance. However, Urban Prep has made adjustments, schedules, one-on-one time, parent-teacher conferences, giving them the best to pull through regardless of what's happening around them. Urban Prep staff helps give my son tough love, the dignity, the hope that his generation needs. And he understands that life and things can be temporary, but it's a choice to make them last. Urban Prep makes him feel like he's not just a number, but a student with dreams and goals and aspirations, because you never know when the principal may call on you. They talk to the young men like they're men, by calling them by their Mr. Tidwell, Mr. Johnson. This gives them power as a young Black male. The teaching staff gives them wholesome, crucial information about themselves that only received myself during my college years. Showing their brothers some love, time keeps them with the perspective to respect themselves and others, which is much needed in our community. The staff stays on levels with
Ms.
the young men by
Sumrall?
providing them with music. Yes,
Your time is up.
thank you so much for your time.
Thank you for your comments. And Vice President Rivelluri will proceed with just one additional speaker, and then that will conclude the public comment portion. And that will be speaker number 4. Sean Shen, please. Speaker number 4.
Oh, hi. Hi. And thank you to let me speak, the board member, and thank you to open this to the public. I'm just having my experience about school, especially for this pandemic time. And then everybody has a lot to audit from this conference, but I only have one target to audit for myself, that is my son. He actually, let me introduce myself. My background is I'm a single parent of a student in the CPS who is under IEP education. But I have a issue getting access to see my son's education during this pandemic, because I don't see my son every day, but he is under IEP education. And the problem is I used to have one chance to observe my son's behavior classes with the teacher. But after that occurrence, the next time I want to attend it as an observer, the teacher told me that the program director or the principal or whoever that is higher than her told her because of any like safety or privacy, whatever issue that is, I was not able to attend that like this kind of Google Meet or Zoom Meet anymore. I'm very puzzled about this. I have attended once. I'm a good observer. I don't disturb anything, but after that one occurrence, I was discontinued. And for the privacy or the safety issue, I don't see any privacy or safety issue at that moment. But my attendance was just discontinued. I mean, this forum can be open to the public and can explain to us why I cannot see my son who is under IEP education through as an observer. Not every day, just once or twice a week or once every 2 weeks. So I really want, and the teacher told me that she can only communicate with me through
Mr.
email.
Shen, excuse me, your 2 minutes are
Yeah,
up. sir.
I just want to summarize my talk. Just let everybody to clarify what is the CPS policy on this? Why a parent cannot see their kids through some individual education program?
Thank you, Mr.
What is
Shen.
the safety and privacy issue here?
Thank you.
Thank you. Thank you for your attention.
Vice President Revoluri, this concludes the public participation segment.
Thank you, Madam Secretary. Just as a question, is it possible to connect folks with specific concerns to someone in the FACE team? Chief McDade, I see you nodding. Great, thank you so much. And thank you for everyone who's joined us and also everyone who made the time to share a public comment. Board members, any further comments or questions? Okay, seeing none, thank you. Is there a motion to adjourn?
So moved.
Thank you. Is there a second?
I second the motion.
Thank you. All in favor?
Aye.
Aye.
We're adjourned. Thanks, everyone. We'll see everyone back in just a few minutes.